BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, welcome back. Quick video then today. There's nothing really much more to say. It's just an extension from yesterday really. So today we do have the CPI, tomorrow is the FOMC, so we'll start off with the Forex like we did yesterday. And just like yesterday, it's moving exactly as I expected into the 200s exponential moving average on the 4 hourly, it's just the 4 hourly for the euro really. So like I said yesterday, there is a pump signal on here and we are back above that trend line of significance. It is a big deal to be back above here, to be honest, because what this gives us the idea that we are looking to do a cup in handle, and if that is the case, then we're looking for a new local high, so a new extension of this overall rally on the euro. That's what we'd be looking at if you think that formation is valid. I prefer to focus on trend, and trend is okay actually. If you take it to a daily, the trend is actually still okay. Didn't actually break down. We got supported on your 200 exponential as well, and again, look at where we are today. Ricocheting off that 10 exponential, the Bollinger Band center, with a view to maybe get a rejection at the 108.1 on the daily, which is your 50 exponential, which is more or less your 200 exponential over here, which is 108 flat. It's also a Bollinger Band center top. So I'm not like trying to be in any way pessimistic about this. But look, we came off this run on the daily on drives of bullish divergence after a decent pullback. So we got all of that, and now we're pushing up to maybe complete the first leg of this. Well, we'll call it not a reversal or anything like this, just a bounce. But it does look okay. I have to say, it does look okay. And depending on what the CPI says today, it will either complement or break the chart, which is always the problem when you're sort of trying to trade anything based around an event. Now, I talked yesterday about my theories of the CPI and then the response with the Fed. But in a nutshell, most people believe that Fed are going to pause. But I am willing to reserve some degree of skepticism about that, because the dollar's wrecked, isn't it? Really, let's just have a quick look at the dollar. The dollar is wrecked, and and a wrecked dollar is inflation for the states. So they probably don't want to see this continue to go down. And like I said yesterday, like, just in a nutshell, it's a brief summary. If all the other central banks, which for the most part is the ECB, they're the ones with the biggest amount of clout when in response to the dollar. If they have said, like they have done, that we're going to raise rates indefinitely until it's sorted out at 0.5 basis points each time, and they actually do that, and the Fed don't do anything, all you'll see for the dollar will be lower lows and lower highs. So maybe they just think, right, okay, so, we could at least raise rates at least just another 0.25 basis points this time. Give our little dollar another push up, 105, 105.4, maybe an extension on the rally, maybe 107 or so, because, for the rest of the year, we are going to go down just based on what's been projected from central banks worldwide. Maybe they'll be thinking along those lines, because a weak dollar is inflation is what the Fed are trying to sort out. So it's a definitely strange balancing act. So anyway, boring you to death. If you remained this far in the video, please let me know in the comments. Right, quick look on the S&P futures. So here we go, smash bang wallop all the way up into the next major area, which is what we had highlighted yesterday. The peak of this run is where we've managed to make our way. A lot of people are still bearish on stocks. Not me at all. My stock portfolio is what's actually carrying me through. It makes me happy in the morning to see it exist, because the crypto one is just like a thorn in my side. But yeah, stock's running really well and continuing to run. No reason to doubt that this is going to continue. The daily does not look overextended at the moment without any bearish divergence on this later stage. We did have it over here, broken. We continued on. So at the moment, this looks like a fresh run, fresh rally, and I'll be looking for a slight extension on this one now. Now that we've hit this area, The next real area, I suppose, of any kind of significance is around 4,550. A decent run. But remember, are you going to buy this run? Are you going to FOMO into it on the CPI day, the day before the FOMC? Or are you just going to accept that this is run, and you didn't take part of it? Remember who told you that this was the lows in stocks? Who told you? I told you, Mr. Humility. Right, so finally we're just going to have a look at Bitcoin. So Bitcoin, and again, obviously XRP just lurking in the background there, doing very well. In fact, just to quickly see, we've already smashed through the first sell area, which is 1960. 2,200 sats on the cards, definitely still pointing towards the 60-cent zone. I know you don't like XRP, Captain Noob Master, but yeah, it's a tradable chart, which is why we trade it. So look, Bitcoin still respected that 200 exponential. Reminds me of a little bit like the Euro, isn't it really? The Euro did exactly the same, consolidated into a 200 exponential. We've done the same here, bang, bang, and fannying around below all the other major moving averages. So the next area on this chart that we would think that this rally could extend to, other than I suppose this 7 simple, which is where we are getting rejected from right this very moment in time, which is basically 26,145. These are dailies, so these will stay here all day. The next target above us, if we were to revisit that, break that 7 simple, is going to be 26,300, give or take. And then a real big problem sitting around here at 26,650, back into and back above that area. So much resistance above us. It's hard to imagine that we can break it. But look, strange things have happened. It hasn't broken down yet, which is the main thing to focus on. We have not broken down. We're still in the descending channel, and the channel is where we descend. And we descend until we bounce, until we break out, which is going to be, in my opinion, towards the end of this month, and we'll be sort of moving towards the $24,000 zone for Bitcoin. That's what the channel suggests based on its trajectory and the 200 simple moving average I'll show you in a minute. 4 hourly. 4 hourly really is just, it's not got bullish divergence, but momentum is turning up on it, so it's not the worst thing you've ever seen. But just to let you know, it's the same old. See this 200 simple moving average? Extend that with its current direction, kind of brings us towards the end of this month, and this will all meet around this area. So if there is going to be a bottom form around here, on a natural consolidation within this channel, I'll be looking for around the end of the month in the $24,000 zones. But things can change. We break out of this channel to the up, and we also break out with conviction, and that conviction will be seen on something like the RSI, like this. There is a trend line of significance on the RSI. Yeah, we could break out on momentum and price action and have continuation all the way up to a new local high in the lower 30s. But for the moment, just allow for the consolidation to kick in. It's almost done as far as I can see. But I don't think it's ready to break yet. But it can do, and this is how we'd see if there is some form of break on this. We'd see it with momentum and from price. Anyway, that's quite a long video, so let me know if you made it to the end. I appreciate it's tiring listening to this boring, crud in the mornings. But long story short, CPI FOMC is going to throw a slight spanner in the works. I expect it's going to be okay, to be honest with you. I don't think it's going to be that bad. Stocks are pricing all of this in clearly. So the stocks normally are ahead of any kind of news. It's a buy the rumor, sell the news type event, isn't it really? So it looks like stocks have priced it in already. Which would mean that when the event actually does come, it's going to be a volatile up, down, all over the place, and probably not worthy of trading. The best thing to do is to get on the right side of the trade way before a day like today, which for me is okay in stocks. For cryptos, definitely too volatile to even consider trying to trade it, as far as I'm concerned. Unless, of course, you're in at much lower areas, again, then you're okay. Right, thanks for watching. Hope you have a nice day. Take it easy.